Welcome to our presentation on swing trading, a popular strategy used by traders to take advantage of short-term price movements in the market. Swing trading is an important tool for investors looking to diversify their portfolios and potentially increase their returns. It's a great way to take advantage of market volatility without having to constantly monitor your investments. Swing trading is a popular trading strategy that involves holding positions for several days to capture short-term price movements in the market. Unlike day trading, which involves buying and selling securities within the same trading day, swing traders hold their positions for longer periods of time, typically ranging from a few days to a few weeks. One of the key differences between swing trading and other trading strategies is that swing traders analyze both technical and fundamental factors when making their trades. They use technical analysis to identify entry and exit points based on chart patterns and indicators, while also considering fundamental factors such as company earnings and news events that can impact the market. This holistic approach allows swing traders to make more informed trading decisions and potentially achieve higher returns than other traders. Swing trading offers numerous benefits for investors looking to maximize their returns while minimizing risk. One of the main advantages of swing trading is the potential for higher returns than other trading strategies. By holding positions for a few days to a few weeks, swing traders can take advantage of short-term price movements that can result in significant profits. Additionally, swing trading allows traders to avoid the volatility and uncertainty associated with long-term investments, which can lead to more consistent returns over time. Another key benefit of swing trading is the reduced risk compared to other trading strategies. Because swing traders hold positions for a shorter period of time, they are less exposed to market fluctuations and other external factors that can negatively impact their investments. This can help to minimize losses and protect their capital, allowing them to continue trading and building their portfolios with confidence. Timing is crucial in swing trading, as it involves buying and selling stocks over a short period of time. To maximize profits, traders need to identify entry and exit points that offer the best potential for gains. This requires careful analysis of market trends and patterns, as well as a solid understanding of technical indicators. One effective strategy for timing trades is to use a combination of moving averages and trend lines. By plotting these indicators on a chart, traders can identify key support and resistance levels, which can be used as entry and exit points. Another useful tool is the Relative Strength Index, RSI, which measures the strength of a stock's price action and can help traders determine whether it is oversold or overbought. One common mistake that traders make when swing trading is holding on to a losing trade for too long. This can be tempting, especially if you believe the market will eventually turn in your favor. However, it's important to cut your losses and move on to other opportunities. Another mistake is failing to set stop-loss orders. These orders automatically sell your position if it reaches a certain price, which can help limit your losses. Without stop-loss orders, you may end up losing more than you intended if the market moves against you. In conclusion, swing trading is a powerful strategy that can help investors achieve higher returns while managing risk. By taking advantage of short-term price movements, traders can capitalize on market fluctuations and generate profits in both bull and bear markets. However, it's important to remember that timing is everything in swing trading. By carefully identifying entry and exit points, traders can maximize their gains and minimize their losses. Additionally, it's crucial to avoid common mistakes like overtrading and failing to stick to a plan. If you're interested in exploring swing trading for yourself, we encourage you to do your research and start small. With practice and patience, you can become a successful swing trader and achieve your financial goals. Thanks for watching. Like and subscribe, and we will catch you on the next one.